Welcome back to Under 450k. This is the YouTube channel where I review suburbs or I analyze suburbs under $450,000 or, somewhat close to around there because, it's getting pretty scarce now, $450,000. And I want to jump straight into this video and I asked the question within the community about which region I should be analyzing next. And the answer came back Geelong. Surprisingly, I thought it was going to be Cairns because Queensland is popping off at this very moment. Arguably, I had 26 votes. I have about 250 subscribers, so I wish there was a little bit more engagement, but Geelong is the vote next, so I will do my analysis on Geelong. And I want to say that Geelong has been on my radar for the past 6 months, and I've been watching this suburbs within Geelong very, very closely and seeing the market trends. And so this analysis isn't just sort of rushed and put together. It's something that I've thought about over a long period of time. And I want to break everything down for you as much as I can. So make sure you watch the entire video to understand the full in-depth analysis of Geelong and Geelong surrounds. But before we get into any of the metrics, any of the data, any of my opinions, I want you to make sure and go and subscribe to my newsletter at Under 450k. Guys, it's literally free. So all you have to do is just chuck in your email and you can get access to all the different suburbs that I'm analyzing. And I go into in-depth detail about the location, infrastructure, important factors, the major projects, and the numbers behind it and whether or not it's a good idea to invest or not. And this one I do on a weekly basis, so it's much more consistent than my YouTube channel, which I try to do as much as I can, but it really depends on my free time and my availability. All right, let's get into the suburb review. And I want to break down Geelong. And there are specific suburbs that I'm actually looking with in Geelong. And now my whole investment ideology or my investment strategy is to find affordable properties. And what I mean by affordable is under $500,000 or around $450,000, right? That's sort of what I aim to get at. That's my sweet spot. Generally, the only areas you find around that mark in Geelong is going to be Corio, Norlane, St Albans Park, Whittington. I'm probably butchering the name, and Newcomb. So this pocket here and this pocket up here, Corio or Norlane, are the specific areas. In Whittington and St Albans Parks, it's more around the $500,000 mark and a little bit over sometimes. And if you want under $500,000 and close to $450,000, you're looking at Corio and Norlane. And there's actually a lot to unpack here in around Geelong and my thoughts around it. So let's get into the first thing is to actually look at the data metrics. And once again, I use BoomScore because it's a free resource. I can just share the data online on YouTube. But I mainly use DSR and H-tag data, and I kind of cross-reference them both to make sure we're getting the most accurate information and most accurate analysis. So make sure you go and check those out yourself. But just to give you an idea, I look on BoomScore because it's completely free. You can go check it out as well. Within Corio, you can find the median price about $483,000. It's a bit less, I would say, at this point in time. But days on market, it's taking 78 days to sell a property. And what that means is it's taking longer than 2 months to sell a property, which is quite a long time to sell a property. If, it's pretty much a cold market, in my opinion. And we can see the data metrics, it's also rising. And a rising days on market means it's taking longer and longer to sell a property, which means there's no real house price pressure. Same thing with stock on market. It's around 1.77%. This is not terrible, but it's not great either. And we can also see the trend has been rising, which means that it's taking longer and longer to sell that property. There's more stock on the market coming on. There's better opportunities. People aren't in a rush to buy, and there's no house price pressure. So if you're really looking for that capital growth, you're not going to get it with these sort of trends. When days on market is trending down and stock on market is trending down, that's where you really start to see the house price pressure rise and capital growth start to occur because it's a supply and demand metric. And so when we look at these two metrics literally tell us that one, supply is increasing, and two, demand is decreasing, which is not the right combination that we want. And now one of the biggest problems with Geelong or the suburbs in general, is the gross rental yield. At 4.2%, you're out of a lot of money every single year. And I'm going to break the numbers down for you. Especially in a high interest rate environment like we're currently facing, this personally for me is not good enough. For some investors, it might be. But that is depending on your own financial circumstances. Vendor discounting is -6%. I can tell that this is wrong. There is definitely some vendor discounting happening. I have talked to some of the agents in the area, and there is certainly some discounting happening, which again indicates a not very hot market. Vacancy rate is 0.7%. That's great. It's very low. That's how we want it, less than 1%. And proportion of renters. Now, on Boom Score, it says 35%. I've checked on both HTAG and DSR. It's closer to the 50% mark and around 45%, 45 to 50%. Now, in Norlane, if we look at the same metrics, it's taking roughly the same amount of time to sell a property with the same level of stock levels as well. Same amount of gross rental yield. Vacancy rate around 1%. Again, that's completely fine. That's a good metric to be around 1%. And proportion of renters is more accurate to what I was saying before about Courier, around the 50% mark. And the reason this is important is because when it's about 50% when it's 50% renters, that means there is high investor activity happening there. So generally what we want in a suburb is about 70% over owner occupiers and 30% renters. So Courier, Norlane are the two suburbs where it's sub $450,000. And actually, I can bring that up for you. So let me look at the Geelong area. So as you can see, this is Geelong. And if we sort of start to put the filters in, I like to put house price. I don't put a minimum. I put $500,000. For the max, I put bedrooms 3. I will never buy a 2-bedroom house. There's never a point to, in my opinion. And I put a minimum of about 400 square meters of land size. And the reason I do that is because anything smaller, you're pretty much getting just a nice duplex, I feel like, or a nice townhouse, in my opinion. And let's make sure we're not including any under contract offers. Cool. And here is where you can really see where the properties are in Geelong. The sub 500K market is all in Corio and Norlane, and all in Whittingham and Newcomb as well, right? So these are the areas that you want to be looking at in terms of properties in this area. And now to further emphasize that there is no indication of capital growth about to occur in Geelong, we have to look at sort of the asking property prices. And when we look at this, we can see that since about, 2022, the height of COVID and the tail end of COVID, house prices in Geelong have decreased and then stagnated for the past 2 years. Now, we can't just go blindly and invest here because there's no indication of a rising market. There's no indication that the value of a property is increasing month on month. It's just not. It's remained flat and stagnant. So the people who think Geelong was about to turn at 2023 would have, held the property for a year and still seen no growth. So if we invest in September of 2024, we're still unsure about whether or not there will be growth happening in the future. Now, there is one pro side to investing into Geelong, and that's rapidly rising rents. Let me get rid of the units and combined. And over the past 12 months, rents have risen 10%. And it's continuing to rise. It's gone from, last year, September, of 380 to about 410. So that's what the average rent price as well. So rents are increasing at about 10% every 12 months, and the rolling quarter change is about 4%. So rents are rising, which is a good sign, and that means holding the property should become easier over the next few years. But that alone is simply not enough. Before we go any further, if you have not subscribed to my YouTube channel, please go ahead and smash the subscribe button, and also smash that like button for this video if you are enjoying the analysis, the breakdown about Geelong and my other YouTube videos. Every single subscriber will benefit from my YouTube channel. Every single investor will benefit from my YouTube channel. I do not gatekeep property suburbs. I do very in-depth analysis. I break everything down for you piece by piece so that you can either agree with me, you can disagree with me, you can fight with me in the comments, you can leave hate comments. I don't really care. I do this because it's a passion of mine. I love analyzing property. I love looking at different suburbs. I love rising markets, etc. And I'm trying to create a bit of transparency within the property industry. I'm trying to level the playing field among investors as well and make it accessible to everyone, right? It's already difficult enough to get property in this country, let alone with people gatekeeping it. Let me get back into breaking down Geelong. Now, the one thing about Geelong that is different from a lot of the other videos that I've done so far is that Geelong is not some regional town in the middle of nowhere, right? It has Geelong has a huge economy. Geelong has a huge population. It has a population of about 250,000, right? It has a huge population. It's not some small regional town like Gladstone or Rockhampton with about a 40,000 population. It's bigger than Townsville. Townsville, I think, has 150, and Geelong has 250. So it's huge. And it also reflects that in the economy as well. It has a huge, diverse economy, including construction, professional services, transport, real estate, and healthcare. Healthcare is very massive in Geelong as well, and retail trade. So it's a very, very diverse economy. So, in terms of economy and diversity and the population size of Geelong, I have no issues. It is a great economy, it has great projects, it has a great diverse economy as well. So in terms of that, there is no issues. There's no point in me breaking down any further of that area because it is perfect in every single aspect, in my opinion. Population summary is 282,000 apparently in 2023, which is great to see. Huge population. Population estimates. I think it's also growing. Um, so let's have a look in 2023. Population resident, it's growing. So the population in Geelong is growing pretty fast as well, around 2%. So it's a definitely growing suburb. And will that have an impact on house prices? Absolutely. Will that have an impact on it immediately? Maybe not, but in the future, absolutely. Now, something else I wanted to talk about regarding Geelong and Geelong's breakdown and the suburbs that I'm talking about specifically, including Corio and Norlane, is that there's a lot of public housing within these areas, right? There's a lot of public housing sporadically throughout Corio as well as Norlane. And so that means when you go to look for a property in these areas, please, please, please make sure you contact a property manager and ask them, hey, I'm going to buy this property. Is there any public housing near this area? Is there any public housing on the street next to me? Is it anywhere on this street as well? Because it will have an impact on your house price, right? And even if you're okay with it, maybe you can ask for a cheaper price to the vendor for that exact reason. Please make sure that you check the public housing. There is also public housing within Whittington and St Albans, but not as much as Corio and Norlane. These are sort of you would say, less desirable areas, especially Corio and Norlane of Geelong. They're the sort of lower socioeconomic areas of Geelong in total. But what does that mean? That means you can find property for great prices within this area. So that's a little tip. So make sure you contact your property manager about public housing within these suburbs specifically. Something that I've never done in my other YouTube videos regarding my suburb breakdowns and regional breakdowns is that there's been a huge shift. There's been a huge dynamic shift within property investors who can't get into the Townsville market, who can't get into the Perth market. They're looking for the next boom locations. And I feel people are getting desperate as well recently. And they're getting so desperate that they're not doing the maths and the numbers correctly, and that they're investing in locations where they shouldn't be. And I feel like people think that just because Queensland had a boom, Perth had a boom, that Melbourne is somehow next. There is no indication of that, and there is no indication that Geelong is going to be the next boom location. And for the people who are, thinking about investing into these areas, let's look at the numbers correctly, right? So you have a huge number of properties under $500,000, some around $400,000, but the realistic price is around 450, right? 450 between 480 is what you'll get a nice 3-bedroom, 1 bathroom, brick and tile house in Corio or Norlane. And let's just take this one for example, because I did some quick numbers on this beforehand as well. You see a beautiful brick house, beautifully renovated inside, on a nice road, not on a perfect piece of land, but still good. And this one is going between $440,000 and $470,000. Let's just say it's $440,000. We get the bottom tail, the tail end of it. There's no vendor discounting. It's just $440,000. So let's put it onto this sheet, the property portfolio summary sheet that I have. This is something that I use for my own investment portfolio, where I keep a track of all my properties. This is not my own one, obviously. This is an example I made up. So if we take the 49 Vermont Avenue, Corio Norlane, and we plug in the numbers, $440,000, and we want to put a 12% deposit, property management fee is going to be about 5.6%, or 6% generally. Interest rates Let's be nice. Let's put 7.69%. Let's be even nicer. Let's put 6.9%, even though I know some second and third tier lenders are around the 7% mark, the 8% mark as well. And the reason I put 12% deposit is that majority of investors want to go with the 12% deposit and pay a little bit of LMI, and then also, use that extra cash somewhere else or put it in an offset account. And when you have a 12% deposit, roughly the LMI will be around 10,000 for this purchase price. And that gives you a total loan of $400,000 or thereabouts. Now, stamp duty is more expensive in Victoria. That's about 22 grand, legal fees, settlement fees, and these are all just rough numbers. Let's just look through and run some of the numbers, the expenses. So we've got landlord insurance, building contents, council rates, water rates, and I will put them appropriate to what I expect it to be. And I've also known, roughly the council and water rates, bank fees, the interest payments are automatically calculated according to what the rate is, the investment interest rate is. And land taxes for this property would be around $1,500 or a bit less, right? $1,500 is a nice figure. And then we have to look at the rent per week. And this is where the gross rental yield is so important and why I feel like a lot of people will struggle with investing into Geelong. Now, for a 3-bedroom, 1-bathroom property, let's have a look at the rough rent. Now, these are some examples I've taken. This one is $400 per week. And this is a good example to compare the other property with as well. It's beautifully renovated on the inside. This is a beautifully renovated brick home in Corio or in Nora Lane, renting for $400 a week. That is so affordable in one end, but it's also ridiculously nice property. And when you plug in $400, that drops your gross rental yield to about 4.73%. And sometimes it's worse. Sometimes it's going to be about 4.5%, maybe a bit better, 4.8%. But what that does is that it puts you out $15,000 roughly in cash every single year. Now, that is before tax deductions, of course. But what that does in terms of impact on your month-to-month cash flow is about 1.3K per year. Now, when you're losing 1.3K every single month, that impacts your lifestyle, that affects your ability to hold a property, and that can make it very difficult for yourself to hold a property. And so this is why running the numbers is incredibly, incredibly important, right? And this is also on a conservative interest rate. Realistically, you'll be getting around 7.6, 7.7 as an interest rate. And that really puts you around 1.6 out of pocket, which is just, it's a lot of money for the average investor to be investing in and lose that much money every single year before tax deductions, of course. But it's still, you have to pay it up front. You have to, right? So make sure you take that into consideration. And now, for example, if you were to buy the same property, somewhere else like Townsville or Gladstone or Rockhampton or Perth, but your rents are much better and you're getting 500, your cash flow immediately starts to improve. Your cash flow immediately starts to improve from, minus 1,500 to minus 1,200. And this is how picking the right property in the right location can seriously impact you. Now, you may wonder, $200 to $300 per month is not that much. I can afford that. Sure, if you can afford it, you can afford it. But the extra $200 to $300 could seriously impact someone's lifestyle and their ability to hold a property during more interest rate rises as well. So please take that into consideration. And the other big differences as well, when you go and invest in Townsville or Perth, you're still losing money because of the high interest rate environment. You are negatively geared. But the difference is that your capital growth is growing month on month by thousands of dollars, sometimes even tens of thousands of dollars, right? But when you take a bet and you're taking a punt, when you take a punt and you go into Geelong and you're losing $1,500 every single month, and you're not also growing in capital growth, you're possibly losing a heap ton of money just by investing in a cold market, hoping it will become hot. And you might be thinking, you're cherry picking example. That just, something's wrong with that property. It's 400. It's not $400. I picked another example, another brick and tile home, very, very well renovated, very nice, very beautiful. Guess what? That's also $400 a week. This is also one of the downsides of going into a very high investor activity suburb like Corio and Nora Lane, where there's just a lot of investor activity, which means there's more competition, there's more vacant homes, the rent prices are cheaper. And achieving gross rental yields of 4.73% is simply not good enough at this point in time to hold property and grow a property portfolio. Once you get this property, individuals may not want, banks may not want to give you a loan in the future because your numbers just don't add up. Now, to summarize what I said, yes, you can go into Geelong and invest in property, but that's a cold market. It's not growing month on month, and you're losing $1,500 a month. Or you can go into Townsville or a hot market in Perth and go in there, get the tail end of the capital growth, and only lose $1,100 per month, but get capital growth of the thousands of dollars every month, and then build up equity, and then go in and reinvest into another location like Melbourne or Geelong or New South Wales, etc. And that's how you build a property portfolio, not by investing into cold markets that aren't growing, but each to their own. Now, there's one other thing that I want to make very, very clear about investing into Melbourne, and I don't want to get political. However, it is a factor you must take into consideration. If you are investing into Victoria, you are investing your money into a state run by the Labor government. And Labor government is known to support renters and to be harsh on investors. But at the end of the day, you are property investing, and you're investing into a state with the highest net debt that is only projected to increase. It's projected to go from about $120 billion to about 190, almost $200 billion in state debt. And there is already the land tax, and there are already other rental law changes happening within Victoria that could impact you. And all of these changes can have an impact on your financial ability to hold property in Victoria, and also your mental state if you're losing a lot of money every single month in a not growing location. So please take that into consideration. I'm not going to say anything more about that because I don't want any political bias or political talk regarding investing in property, but it's something you must take into consideration as an investor. And if you have the cash and if you have the income to hold such a negatively geared property for 12 to 24 months, then it might be worth it for you. But if you are an investor who is looking for capital growth, who's looking for equity within the next 12 months, this is not the location to be buying in. It does not make any sense on both the math side and both on a data side. And at the end of the day, property investing is a business. And in a business, the bottom line is one of the most important things. Are you green or are you in the red? Is your cash flow negative or is your cash flow positive? Right? The banks don't care where you invest your money in. They just care that they're making money, they're getting interest, and that you can build a property portfolio. Right? And investing into Melbourne will put the biggest hard brakes on your investment journey possible. Or investing into Geelong, specifically, without having the right cash flow. So please take that into consideration. I think it's a seriously, seriously undervalued market, but it's not going to change in the next 12 months, in my opinion. I will reassess the situation in 6 months' time, but I hope that breaks down for you numbers-wise. Data-wise, and location-wise of what I think about Geelong. And I hopefully that answers the question, and I hopefully you find this extremely valuable. And once again, if you haven't subscribed already, please subscribe down below to my YouTube, and also go subscribe to my newsletter, right? I go through suburbs on a weekly basis of all the hot markets, the cold markets, the suburbs, what's good, what's bad. And if you have any more questions regarding property investing, you can join my private paid community, right? It is a private and paid community for investors looking to share knowledge, to get answers specific questions by me, in a personalized support with also like-minded individuals, right? I'm creating this community. It is paid. I don't have a free Facebook group or anything like that. It's going to be paid because I want people to commit. I want genuine investors who are looking to understand property and looking to grow their knowledge. And free communities aren't the way. There's a lot of misinformation, and I want to create a private community which is all about helping each other. And it's not too expensive. If you have enjoyed my breakdown and my analysis, please subscribe. I will never gatekeep properties. I will never gatekeep suburbs or hot markets or what I think is happening. That's all always will be free.